We've seen the industrial stocks rally a little bit more recently. We got good news from 3M and GE that their industrial businesses are top performers. Stephanie, what's your take on the industrial sector currently?
I think the industrial sector is very, very cheap. I think that the risk reward headed into the print was very good because the stocks had lagged the broader averages. But that said, there are some winners and losers with any group, but specifically with industrials, I think the later cycle stocks are doing better than kind of the earlier cycle companies. So that by that I mean kind of aerospace, construction, particularly in North America, HVAC, all doing better, whereas where we were bullish on truck and auto, I think those sectors have actually played themselves out, and we could see a pullback in those names. So there are winners and losers, and I think you got to be really careful on where you're investing.
Let's talk about a couple of the names that reported today. Boeing's one that you own. It was a classic beat and raise guidance. The stock's being rewarded for today. How'd you feel about the quarter?
Well, this stock totally underperformed the market and its peers year to date, and so people kind of wrote them off because they were concerned about the 787, the aircraft not getting out, having issues, and that kind of thing. So it was a beat and raise, but it was really even better than that because even though expectations were low, so it it popped. The underlying fundamentals in terms of the order rates, the backlog were very strong, and margins were actually very impressive, both on the aircraft side and on defense. We've written off defense, right? But those margins were better than expected. So I think the guidance is conservative. I think the stock is still cheap. They're gaining a lot of cash, and so that one I think you can still own.
Can you buy it though?
It's up 4% today, so I think you want to just wait for it to pull back. We have GDP on Friday that could easily disappoint. So on a bad headline number, I think you buy it maybe under 75.
Okay, so how about Caterpillar? That was a different story. There were high expectations going into that quarter, and they beat the quarter, but guidance was not what people wanted.
They beat the quarter. They had a little bit disappointing in terms of revenues, although incremental margins across all segments were quite good. So expectations were high, to your point. Particularly because URI and a couple of the North American construction companies or equipment companies talked about good things. So everyone then just extrapolated the cat would then follow. And they did. North America was good. But I think what's going on this year is that you have strong North America, you've got weak international. And so you want to try and find the US-centric companies. And, CAT does have a lot of global exposure. So, this is something that you kind of want to pay attention to. If you want to own kind of a multi-industrial, Eaton is a really good one because they have a fair amount of US exposure and they're in the right markets internationally.
So it's an end market and geographic story that we're looking for.
That's exactly right. And valuation.
And valuation, of course.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to